Hello and welcome to another update video about Natgas as we're heading into the weekend. So it starts to look a bit promising. We have now finally broken above this trend line. I think the futures did already break above it basically yesterday or the day before. Yeah, I do need to, and again, I struggle to find time to add the futures onto this as well. I don't do the UNG anymore because UNG is there's an issue with sort of tax stuff or whatever. It's a bit painful for non-US citizens. But here this natural gas futures, I might add that to the analysis. If we draw here, the trend line, obviously this already rallied before, so the structure is a little bit different here. But at the moment, this looks like a three-wave structure to the upside. So let's see how this is going to develop. I mean, if you see this, you could say, okay, maybe we had a wave 1 down, a wave 2 up, a wave 3 down, now wave 4 up. And if we now break below that $2.07 level, yeah, it could send us down in the fifth wave. And if we get that, then this is a signal that we will not get a higher C wave, most likely. The reason for that is, no, this was oil. Let me actually go back to the reason for that is that at the moment I'm counting the move down as a B wave, yeah, and this is possible because it's a 3-wave move down. But if we get 5 waves down, I cannot count this as a B wave anymore. So we did talk about that we expect some kind of bounce here as soon as we break above this trend line, either in the C wave, and this is now very early days, so I'm gonna zoom in a minute, we can talk about that. Either here in a C wave that should take us to 320 eventually. In that C wave, we're looking for a 5-wave move, so we're looking for something like this: a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. Yeah, we want to see 5 waves in the C wave. Or alternatively, we want to see, and that would be in the let's say direct bearish sell-off scenario where we are going to end wave 2 directly. Yeah, this is basically where we're ending the bear market in this move directly, because in my primary expectation, I actually expect that this was a 3rd wave. We're now moving up in a 4th wave. It's hidden up here, yeah. And we would then come down in the wave 5. So I'm still, let's say, bearish on Natgas. I still expect one more low. And I have been expecting one more low since, for a long time, since we actually started to rally here back in February. Now you could say we made that one more low, yeah, because we did break below the February lows here last week or this week. But from a structural and wave count point of view, I would like to see that C wave up first to complete the 4th wave, and then a wave 5 down, maybe into the region around 150, depending on how high we would eventually go in this 4th wave. But for now, we need to consider both options. Yeah. So let me take that off. So the idea is that either we go up first and then come down, or obviously go down and continue the move down straight away. That's what obviously this price action is going to show us now, because at the moment I'm still counting that as an A, B, C structure in wave 4. The B wave consists of 3 waves, A, B, C, and I can continue to count it like that as long as we only have 3 waves. However, if we get a 4th wave and a 5th wave, and this might be this 4th wave, then we have 5 waves down. It cannot be a B wave anymore. And then I have to consider that we did something like this, that the wave 4 was actually sitting here already, and this is the wave 5, because wave 5 has 5 waves. Hope that makes sense. Sorry, it's a bit complicated, but that is what the rules of Elliott wave can appear to be, if you're not dealing with this all the time. But most importantly, we did expect a bounce here either way. Now we need to see how strong is that going to be. I'm going to zoom in a minute and we talk about critical support levels. But obviously we've got the monthly candle here today. So this is going to be interesting, because on the monthly chart, let me open that up. We might look at that sort of towards the end of the weekend, how the monthly candle closed. So it's obviously a bearish candle, but what's important is here the monthly MACD. that is still pushing down further. That's why I'm still, let's say, bearish on Natgas. In history, whenever we hit a bearish cross, we saw a 50 to 60% drop of the Natgas price. That forecast in December that I gave you did work out nicely, purely based on the monthly MACD and the Elliott wave count. But yeah, this is now where it's going to get interesting. If we zoom in a little bit, we obviously broke above the trend line. That's a signal that this move down is at least temporarily over. We have, again, a possible impulse here to the upside emerging. Not finished yet, in my opinion. If I go to the 30-minute chart, and this is spot that I analyze, obviously, yeah. But let's see, this made a new low here. So that's a shame, because otherwise I could have counted that as a 1-2 setup. This is not possible. Let me double check the futures. Sometimes things get a little bit distorted. Yeah, okay, see, this is difficult then. First of all, with this gap, which it did. But it's not this is not crystal clear to me, especially with the, with the gap. But you could always count it. I mean, you might get away with counting this as a wave 1, then here a wave 2, and we could now be rallying in a third wave already. Yeah. But then basically on the spot, we're here, yeah, when I analyze spot. So let's just look at it on the spot market. But the thing is, possible 1-2 here, and this might be a third wave, and within the third wave here maybe a first 1-2 setup. So that doesn't differ a lot from spot. So let me get back to that, and then still plan to put the futures onto the analysis as well, but it's just timing, time is difficult, time is rare. So if I go to the 15-minute chart, obviously I cannot count this as a 1-2 setup, unfortunately, but this here might have been a wave 1. But then, so it's unfortunately not very clear because there is limited structure in there. And it's pointless to go to the 1-minute chart, to be honest. So, oops. But it looks impulsive. Yeah, it's just hard to count it like that with that spike that came. But we can give it the benefit of the doubt, which would mean that we here had probably a wave 1. I'm not highly confident because I don't have the subwave structure that I need to analyze. This was different when we did this here to the upside. That was a nice impulse, and then I could give you an ABC down, and we had a trend reversal area here. Nice entry point, but we can do the same thing again. It's just here I don't see that crystal clear structure. But also here, possible impulse up, and then maybe ABC, A wave, B wave, C wave. And where's support? So we can focus on higher now, as long as we're holding $2, yeah, on the spot market here. The 50% fib retracement is $2.05. That's the first level where a wave 2 ideally stops. So watch that level, and then $2.03, and then $2. And from here we could rally in a third wave. Question is, is it just an ABC or is it a third wave? That's what the market will show us. That's where context is dependent, where it's context dependent. And if it's a C wave, we should get an impulse, but it should, what I just show you here, because this is so tiny down there, this might just be, the whole 5-wave move might just be the first wave of that C wave. So eventually it will cascade higher. But again, very important, I'm not telling you this is the case. What I need to see is, first of all, now that the retracement holds, and then we can be hopeful that we rally in a third wave. As long as $2 are holding, I would now focus on higher, because we finally see a bit of a reaction, and I do expect still the C wave. But if the $2 level breaks, we are probably going to continue with that overall bearish downtrend. What would be the target for the third wave? Now I can give you a guideline. Yeah, it's not entirely clear because I don't know exactly where this wave 2 will bottom. Let's say it will bottom at the golden ratio. They often do that. It's $2.03. then the 1.618 extension would take us to 228, just so you have an idea. So we're definitely going to observe that next week. This will be interesting, how this now develops. Now bear in mind, it looks similar to what we did here. So it was just continuation to the downside, but that's why it's so important that this support level is holding. So normally such a 1-2 setup is invalidated if it breaks below the beginning of the wave 1, but I always say that below the 78.6 retracement, that's the first warning that it doesn't work out anymore. All right, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.